Welcome to ABM Global Compliance. In this video we will talk about anti-money laundering, the essential role of AML compliance. What is money laundering? Money laundering is transforming the proceeds of criminal activity into legitimate assets. Money laundering happens through several means, including using cash, illegal transactions, and foreign currency. The goal of money laundering is to hide the illegal origins of the funds and make them appear to be legitimate. Ways of money laundering. There are many different ways of money laundering. Some of them are very simple. For example, you can send money to another country. You can also send money to a friend and tell him to deposit it into your account. This is a good way of laundering money. How does money laundering happen? The process of money laundering involves the conversion of criminal proceeds into legitimate assets. There are several ways to launder money, including using shell companies, making money appear to be coming from a different source, and moving the money through a variety of financial institutions. There are several steps in the money laundering process. The criminal group obtains the illicit funds. They may convert them into another form, like cash or property. They may try to hide their source or ownership of the funds by moving them through numerous accounts and companies. Finally, they must find a way to get their money out of the country, usually by laundering it through a foreign bank account or sending it offshore. The money laundering process can take place in several stages: currency conversion, account creation, account transfer, money transfer, conversion of foreign currency into local currency, bank account opening, currency exchange, transfer of funds to another country, bank account. What is anti-money laundering? Anti-money laundering, AML, is a proactive measure taken by financial institutions and law enforcement to identify and prevent the laundering of illegal funds. AML procedures include monitoring the financial activities of individuals and organizations that may be associated with criminal activity and taking action to control the flow of illicit funds. Why is AML so important? AML is important because it helps identify and prevent financial crimes by detecting unusual activity on a person's bank account or credit card. AML can include large deposits or spending patterns that don't match the person's known income or spending patterns. History of AML, the rise and relevance of anti-money laundering. AML has existed since the 1970s when anti-money laundering regulations were first implemented to combat the spread of terrorist financing. However, in the 1990s, the AML landscape began to change as new technologies were developed that made tracking and tackling money laundering much more efficient. The challenges of anti-money laundering. One of the biggest challenges in combating money laundering is the lack of a centralized financial transaction database, making it difficult to track and identify suspicious activity. How do banks and other financial institutions identify and prevent money laundering? Banks and other financial institutions use various methods to identify and prevent money laundering. These methods include monitoring transactions, reviewing customer accounts, and using anti-money laundering software. What are some of the financial crimes that are associated with money laundering? Some of the financial crimes that are associated with money laundering are bank fraud, investment fraud, insurance fraud, tax fraud, drug trafficking, human trafficking, weapon trafficking. What are some of the challenges associated with combating money laundering? There are several challenges associated with combating money laundering. One challenge is that it is difficult to identify suspicious activity. Key components of an effective AML compliance program. An effective AML compliance program includes measures to identify and track suspicious activity, implement risk management processes, and maintain an up-to-date AML compliance program management system. The components of an effective AML compliance program include identification of customers who may be engaging in suspicious activity, assessment of the nature and amount of the suspicious activity, assessment of the risk that the activity poses to the financial system, implementation of appropriate AML procedures. The role of AML compliance in the fight against terrorism. AML compliance is an essential part of the fight against terrorism, as it helps to identify and prevent financial crimes. By identifying and preventing financial crimes, we can help to prevent terrorist organizations from accessing the money and resources they need to carry out their activities. The importance of AML compliance. AML compliance is important for banks and other financial institutions because it helps ensure that the financial system is safe and trustworthy. AML compliance helps protect the bank from criminal activity, including money laundering and terrorism financing. The role of AML compliance in U.S. anti-terrorism efforts. U.S. anti-terrorism efforts are primarily dependent on practical compliance with AML laws. The Anti-Terrorism and Effective Death Penalty Act of 1996, AEDPA, created a federal sentencing enhancement for criminal violations of anti-terrorism laws. The role of AML compliance in the EU anti-terrorism strategy. The EU is taking a similar approach to the US in emphasizing effective compliance with AML laws. One of the most important aspects of this strategy is its focus on the need for an effective inter-agency coordination mechanism. The role of AML compliance in the UK. AML compliance is a crucial component of the UK financial regulatory framework. The UK has had a comprehensive AML compliance governance since 2003, one of the strongest in the world. Conclusion. Financial institutions must take steps to ensure that their customers are not engaging in illicit financial activity. This includes implementing anti-money laundering, AML, compliance measures to ensure that their customers are not using their accounts to launder money or to finance terrorist activities.